Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. Markets are like a puzzle. Some days the pieces fall right into place, and other days it takes patience to see the bigger picture. In today's video, I'll not only walk you through my trade plan for Monday, but I will also share a couple of critical observations I have spotted on the charts and some of the charts. These are not just routine signals, they could play a big role in shaping the next move, and ignoring them might mean you are missing out on an important clue to solving this puzzle. We'll cover the key levels, the scenarios I'm preparing for, and how I plan to adjust my trades based on these insights. If you find value in this analysis, please make sure to like the video, subscribe to the channel if you haven't already, and share your thoughts in the comments. It would be also great if you could share how your entire trading week was in the comments. It would be great to hear. And on that note, we'll get right to the charts. And as usual, the video will be divided into two parts. First, we'll be discussing about what we did today compared to what we had planned yesterday. And in the second part, we'll cover the trade plan for Monday, as well as I'll share the critical insights that I have and that I feel might be an important addition to your knowledge of the overall market scenarios, right? So first we'll start with the basic things. And today markets opened with a cap up, immediately went into some selling, then formed a base above previous day's high, right? Now, as you all know, previous day's high usually will offer some resistance to the market, and until unless it is broken, it will offer some resistance. And once it is broken, it will turn into a support the theory of polarity in the to stock market. My first trade and the only trade in the day was this double bottom breakout. Now, there's a separate video on how I trade reversals and the only pattern that you need to trade reversals like a pro. So, in case if you have not watched it, kindly go and watch it. It's on the channel. And that is the same logic that I had applied here. So, we formed a double bottom near a support area. Now, why do I call this support area? This was yesterday's high. Once broken, turns into a support. Plus, it was a good double bottom formation around here. Uh, so this was the first entry I entered in the 950 candle once this particular inside bars high was taken out. My initial SL was around this red candle's low with some buffer, of course. After market formed this swing, I moved my stop loss to this swing below this red candle's low. Then market moved, and my initial targets were around the day's high, right? Because we had seen some selling from day's high, and this is a good selling candle in the first 5 minutes. Now, this might also be judged as a profit booking candle of P for people who would have carried overnight longs. So at the opening only, they would have seen some good profits and they would have wanted to book their profits at the day's high. But again, whatever my first target was around the day's high. And as soon as this inverted hammer had formed around the day's high, this is where I exited, right? Now I entered around here. I exited around here. It is just a small part of a much bigger move. But like I said, because of the uncertain ways or irrational ways, erratic ways, you might call it whatever, the market is moving. You ask anybody who is into full-time trader, they would agree with you. Nifty and overall Indian markets have been moving in a very erratic way, and that is the reason why I plan to be extra cautious. And that was the reason why I exited. Okay, this was not any exit signal as per all the systems or rules that I follow, but I still decided to exit and not take a risk because number one, the premiums did not move as much as the spot did, right? Because of the VIX, which is crashing. More on that very soon in this video itself. And secondary, I took a trade after a couple of days because I did get something as per my setup, and I did not want to risk it, right? So what happens is, there is something which goes on emotionally and psychologically. Once you have not taken a trade for a good couple of days, and then the first trade that you take after if it's a voluntary break, whatever it is, if you are on a holiday and you're not trading for a week, or and once you start trading back again, and the first trade that you take, if it is a red trade, it hurts you psychologically, right? So whenever I say whenever there's a long break or something which is not there, if you take a trade, try to book a profit in it, even if it's a small profit. And that was the reason I decided to book this particular trade around the closing of this particular candle. Now, immediately after my closing, of course, the market did give a good move, and had I held on to the trade, had I held on to my setup, we could have gotten a very, very good result around the trade, and the logical exit would have come somewhere around this candle, right? So this is the big move that we missed. But again, these are part and parcels of trading. You get to capture the whole move someday. You don't get to capture the whole move the other day, but it's completely okay. Do not let FOMO get the better of you. And that was the reason after this particular trade. Again, there was no particular trade setup also which happened. Of course, apart from this, there was a big double top which was in the formation, which I was looking at. But then again, the breakdown did come. Sorry. Yeah. The breakdown did come, right? We went below this, but again, there was no solid closing below it. Plus, of course, we needed a pullback. So again, no short trades around here. Otherwise, I could have taken this particular trade around this level as well. But then because that did not happen, nothing, no further trades for the day. And I closed my entry with a very small profit after a couple of days of not trading, right? So I hope the simple trade of how simple things work. I always keep on saying things in the like simple things work, keep your trading as simple as possible. And this is a very good example of how once the markets went above our levels and then we got a double bottom formation around our support levels. This is where you and how you plan your trade, the SL, the trailing and everything. And also my rationale behind why I got out early of this particular from this particular trade. Uh, so that's was it all for today's trading plan. Now, if we are to look at a trade plan for Monday, we'll start with the weekly, right? We have closed a good trading week. Now, there is something which I want all of you to observe. So this was the Fib weekly Fib resistance that we had drawn. So this was a good 6 week of markets falling down. Markets, this was the Fib resistance of this high to this low. Markets initially took a resistance from here, fell down, and we are again here. Now, what do we see here is a double bottom. Now, the breakout of which will come above the fib level. Now, I had needlessly be saying that, okay, above this level, we are automatically long, right? Plus, we can see a good double bottom which is forming on a weekly level, right? So this is something which you need to keep in mind, that above the 0.618 zone now, which also happens to be the neckline of the double bottom or the level where level of importance which is there, we are automatically long. That is something which we have been planning since a very long time. What we also will be doing is if we are moving up above this level, we will be above the resistance zone and we can expect some good trending moves in the market. On a 75 minutes time frame, which is a key time frame that I use, we are in a lower high, lower low formation as well. So on a bullish side, everything is working perfectly fine. There's another thing which is there, which I look at, which is a data point. There's nothing on the charts, but then again, at the end of every trading day, you get a data from NSA, which also shows the FIIs and DIIs long and short percentage. You can ignore the DII's part. The key data to focus on is the DII long short part, right? And long short is something which I believe is the only thing to look at is the extremes, right? When are the FIIs extremely short? Like 90 to 93% short position they are having, and when are they extremely long, right, wherein they are holding 90 to above 90% long or short basically, right? So these are the extremes because these are the places from around which you get good move on the other side. So right now the FII is short. Around a couple of days back around here did touch that extreme point. Today I believe it is around 88% short, so FIIs are still carrying 88% shorts, right? Now imagine if we go up above these levels and we start trading and we start moving even higher. So FIIs who have been holding shorts since all these levels, they will be trapped, right? So they're still holding 80 to 80% shorts and they will feel trapped. And again, we might see some short covering rally on the upside. Right. So try to understand, like the reason I started with the started today's video with the market as a jigsaw puzzle is because I'm trying to put out different things together, and we are trying to see which of the theories makes much more sense, right? Now, there is another thing which is on my mind, which I have also spoken about in the last couple of videos, which is the India VIX. Now, India VIX has been crashing like anything. And right now, India VIX is around the lowest levels that we have seen in very long times, right? And whenever the market, the India VIX hits such lower levels, which is 10 and below 10 levels, I'm sure today the markets had gone down below. Yeah, it went down below 10, 9.85 something, which is the low level for today. So whenever markets hit the lower levels, the VIX rises, right? Now, usually, India VIX will not rise with a rising market. In case if it is rising with a rising market, the up move which is coming is questionable. Usually, what happens is India VIX will rise when there is a fall in the market, right? It also is an indicator of the fear in the market. So there are two scenarios which I are playing, which are kind of in a conflicting nature. Number one is the long short percentage based on the FII data, right? FIIs are kind of extremely short, and in case if we move up above this key level, we might that might start a short covering rally. But then on the other side, why are the FIIs still holding on to such levels of short? They might have been short from these levels. They might have been adding to their shorts from around the high, right? From where we have seen a good 6 weeks of going down. But then we have almost recovered till the zero point 0.5 to 0.618 zones, right? Now, if we as retailers can see these zones, I'm sure FIIs have got much better analysts than your Nifty Guy. And they are also much aware about what the market is and where the market is trading. Now, there is a second theory which I feel might play out is uh, markets will go up a little bit, bring in more buyers, while the FIIs are still holding on to their shorts. That will also lead to a little bit more fall in the India VIX, getting in more people to go long, and then the market falls down, right? No, again, try to understand. I'm not asking or I'm not saying that this is what is exactly going to happen because there is nobody in this whole wide world who can predict with 100% surety that this is the scenario which is going to play out. I am simply uh, sharing what exactly is going on in my mind with my way of reading the tape, right? So these are the multiple things that I look at. These are not just the price action of the charts, but which I look at. But then again, uh, on a wider picture, you need to pay close attention to these things as well. So these are the things which might happen. Number one, we might induce a short covering rally wherein the FIIs who are holding extreme shorts might be forced to cover their shorts, leading to a good move on the upside. Number one scenario. So I'll be paying close attention to the change in the FII's short holdings in the coming couple of days. The second scenario, like I said, people will be FIIs or whatever the market makers, people will be enticed to enter into longs once we are above these zones. And that is where the real selling might kick in with some liquidity which is being taken out from people who are creating longs around here and their SLs being triggered, and then the markets can fall down, which ultimately will also lead to the rise in India VIX to some extent, which is kind of looks not too far away from where we are trading right now. So these are the certain scenarios which I wanted to discuss, and I will be keeping a close eye on both of them, the India VIX levels as well as the FII long short percentages, plus how the market, how the prices are reacting once we are above these levels, or are we actually going up above these levels? Are we taking a resistance from this level around here, and this is the short-term top? We can even start to fall down from Monday itself with this signaling another top, and as in the wicks bottoming out usually is associated with short-term tops. But that is something, again, like I said, we do not predict we will, but we are kind of preparing ourselves for everything. But again, like I said, we take one day at a time. So for Monday, this should be your key trade plan. Above this, we are long, right? The best entry will be if we are opening flattish, we are breaking out, getting a pullback, we can create a long entry. Now, I'll also use fib. So this was the major swing that was made today, and I will be marking only the 0.5 to 0.618 zone, which will be acting as a support zone. So any short entry that I will be planning, it will be below this. And in case if market opens flattish, falls down, and we see some buying or positive price action around the fib levels, that is where I plan to go long as well, right? So this will be the simple trade plan for now. And as again, I am quick telling you guys again a quick word of warning. Uh, Monday is the expiry minus 1 day. So if you are into option buying, and you trade Nifty like me and you are an option buyer, you're a scalper, please make sure to shift your trading to the next week's expiry. You might be paying a slightly higher price or premiums for your entries, but then you will be safeguarding your capital and you will be doing a lot of good to your capital, right? So that is something which I personally do on expiry and expiry minus 1 day. All my trading shifts to the next week to save myself from the theta decay. It's a simple thing, right? But most people want cheap options, and that is what they associate option buying with. But then again, option buying is just a way for me to execute my tools, execute my trades. It's just a tool that I use, but then my focus is mainly on preserving my capital to the maximum that I can. And this is a small way which goes a long way, right? So I hope you guys will pay attention to it. And as again, I will still be keeping my trading activities to a bare minimum, and I will be paying close attention to the details that I just shared with you guys. So yes, that's it for today's breakdown. The market is giving us clues, but it's up to us to connect the dots and stay disciplined. So keep an eye on the levels and observations we discussed, and because they can make all the difference in the upcoming couple of sessions. So if you found this video useful, don't forget to like the video, subscribe if you haven't already, and share it with fellow traders. And remember, success in trading doesn't come from predicting every move, but from preparing for every possibility. Stay prepared, stay patient, and I will see you in the next one. Have a good weekend, you guys. Do your backtesting. Uh, do your charting, do everything, try to backtest your strategies or your setups as much as you can. So the more you, the more time you spend in sharpening your axe, is the less you bleed in the real war. Is there's a saying which goes, yeah, use the weekend wisely. Also spend time with your family. Go out. The markets have been stressful enough. Relax, take a breather, and I will see you in the next one. Cheers.